Hey guys, welcome to another episode of Trading Bitcoin with your host Tone Vays. Starting a little later than I wanted to do this like an hour ago, an hour and a half ago, but life gets in the way. So this is where we are. It's about 11:30 p.m. Eastern time in New York. Hopefully I get everyone. Yeah, I guess I messed up the time of when the show is, but we are live. Anyway, all right, let's just go to screen share. Let's see, I'm gonna attempt not to make this too long either, but last time I spent way too much time promoting the conference and stuff. But so check it out, the Unconfiscatable conference. I'm hoping I can sell enough tickets and continue to bring you good speakers. So I'm working on a few other really good speakers, but it's not as easy as it sounds. Getting speakers because the space is saturated with conferences. So this has to be a really, really good one. And only, people that I feel are going to be very good on stage and provide the maximum amount of knowledge. The poker tournament, we're going to add descriptions and we're going to make it clearer on everything. But I just want to make it clear that there is no profit being made by the conference on the poker tournament. This is professionally organized, like a pro-am tournament. The expenses of the tournament will be taken off the prize money. And then I do want to set a little bit aside for like Bitcoin development. And I'll get you the number shortly. But there's absolutely no profit going to me or the Unconfiscatable LLC, which is the company behind this whole thing. So just want to make that perfectly clear, okay? I'm trying to get more celebrities in that game. You see some of the pictures on the top page, but anyway, you get the point. Some of these pictures will rotate because if I have more high-level people coming in, we'll make more pictures. All right. And finally, just real quick, my workshops, the perf workshop should now be going away from this screen. Nope, still here. I guess it's still November 3rd somewhere in the world. So probably tomorrow, the perf picture will be gone. I'm trying to add Tampa. Can't seem to get in touch with the Tampa blockchain incubator, but I should probably try harder. And then if I can work out a date, there will be a Tampa workshop between Aruba and Vegas. As you can see, I'm doing a lot of workshops because honestly, I don't know if the conference is going to make any money or not. And if I'm going to have to dish out a bunch, then I would like to make some beforehand. So I don't care what you people think, honestly, but I'm trying to do something good for the space. So if you like my work and you want to support my work, please use the affiliate page if you are going to buy these products or use these products anyway. All right, and the same thing goes for the Amazon affiliates. All right, let's go to the charts. Here's the monthly chart, and the monthly chart has broken the trend line. Now, we have an entire month. It can't just break the trend line on November 3rd. It has to close above this trend line. Not only does it have to close above this trend line, I need it to close above this moving average. So if we can close this month in the vicinity of $7,000 per Bitcoin, we can begin to reconsider whether the current environment is still like the 2014-15 bear market. Until we close this month above that moving average, it is still the reincarnation of the 2014-15 bear market. It really is that simple, because if you look, we had a candle that did close above that short-term moving average, which is a 7th-month moving average. That happened in June of 2014. The next candle closed back below that 7-month moving average, and that was in July of 2014. So there was really and the next time we closed above the 7-month moving average, we were right at the trend line resistance, and the following candle both opened and closed above the downward trend line and above the moving average, and the moving average had started rounding and flattening out, okay? So obviously we are not here yet because the moving average is not flattening out yet. That was in July of the following year, right? So there are several possibilities that could happen here on a longer term scale. One of them, and this is the most troubling possibility. So I guess I should start with the worst case first, right? The most troubling possibility is that this bear market is worse than even I thought it could be. And that means that if we bounce here, that bounce is actually could be equivalent to the May and June bounce. And that would set us off for another year or a year and a half of a bear market. I think this is very unlikely, okay? But if that happens, if we bounce to, say, the Fibonacci line of 7,600, or even the other Fibonacci line of 10,000, and then reverse and go below this green upwards trend line, that could set us up for a 3-year bear market instead of a year and a half that we had before. That is the absolute worst case scenario that I did not even consider until very, very recently. And I don't believe that's going to happen. I do believe that the halving will save us. That's what I still believe, right? But that is a possibility you need to consider. Now, obviously, in that case, my short will get liquidated because my liquidation on my short is pretty much this monthly Fibonacci line. Unless I see the environment as bullish and I exit myself before my liquidation is hit, which is perfectly reasonable when you are a trader. You reevaluate. Now, I don't believe that to be the case. And if that's the case, it's also possible that we're going to go up and up and up and up and to new all-time highs. The other possibility is that this trend line remains intact and we end up closing below this trend line by the time the month ends, keeping our DeMark count, keeping our TD count intact into a 9 around the vicinity of the other Fibonacci line, which I've lowered to be 78.6, just to kind of, again, I don't have time to deal with you people and argue with you. So sometimes it's easier for me to just change the damn thing just to avoid a dozen extra tweets. I wish I can mute like all of Twitter, like not mute it, right? Because I don't want other people to read your comments either. I wish I could turn Twitter into a Telegram channel where nobody can reply, because the amount of useless comments outweigh the amount of useful comments 9-to-1. So in order for me to read a useful comment that is actually helpful and where people have done some actual critical thinking, and it helps me be a better YouTuber, it helps me be a better analyst. In order for me to read that one comment, I gotta read 9 to 10 of pure garbage. And then similar things are on my YouTube comments. Add 30% pure scams, and it gets very, very annoying and frustrating. So once again, I'm debating turning off YouTube comments only because like there's not enough time in the day to read a useful comment out of a sea of garbage. I would like them all to be useful, but they're just not. So until I see evidence of a monthly candle closing above the 7-period moving average, I will assume that the sequential count will go down into a 9. I will assume we're going to reach the next target of a moving average. I will assume we're going to reach the next target of the trend line. I will assume we will reach the next target of a Fibonacci line. I mean, those are the targets until the price proves otherwise. Bitcoin price remains uninteresting as long as it stays in the triangle. Now, people have commented, how come my triangle looks like this and not from the very top? My simple answer is because my triangle has always looked like that. It's not that I started the triangle from the top of the bull market and then conveniently adjusted it to fit what my brain is telling me I see. This has always been my triangle, okay? So when you say, how come you didn't draw your triangle like this? And then like that, well, you are the one that's fitting something to what you want and not me, because the only way I can draw it is this way. Well, it would obviously be way higher, right? And that's not a real descending triangle, because a real descending triangle, in my world, I don't know what it is in your world. In my world, a descending triangle needs 3 points of contact along each line. Now, we clearly have 3 points of contact along the downward sloping side of the triangle, but we do not have 3 points of contact along the bottom side of the triangle. The only way to draw the triangle with 3 points of contact is to draw it this way, right? But if you draw it this way, you do not have 3 points of contact along the upper side of the triangle, and you have fully broken the triangle to the downside, fully broken the triangle to the upside, and now you are back at the bottom of the triangle. So if you did draw your triangle this way, it is totally meaningless at this point, and you can simply delete it. It is not a breakout above the triangle. No, it's no more of a breakout above the triangle any more than it's a breakdown above the triangle. That's a wash. It broke down below and was a fake out. It broke out above and was a fake out because we went below the triangle. So the only reasonable way to draw this triangle is with maximum points of contact as low on the candles as possible. So that means I can actually do it this way because I no longer need this point, this way here. Right? I need maximum points of contact without breakouts above or below. So you can readjust this triangle. Now what you need is at least 3 points. You need at least 3 points of contact at the top and at the bottom. And because this is a point of contact, it did not close below. This is a point of contact. I readjusted my triangle so that it does not close below. That is a point of contact that did not close below. So the moment this point of contact showed up, I can create a triangle with 1, 2, and 3 points of contact. So this point no longer has to touch the bottom of the triangle. I made, because I am within the criteria of a triangle without needing this to touch. On the upper side, once again, I have 1, 2, I'm touching that wick, and 3, and these don't actually have to touch it. And I am still within the triangle. Now, I don't see myself being able to adjust this triangle much going further, but this is my optimal triangle. It's touching the maximum amount of candles and none of those candles are closing outside of the range of the triangle, okay? Now, let's talk about something else. Let's go to Twitter, because this is how Tone Vays apparently wastes a lot of his time. Somebody who's not a trader that wants to pretend to be a trader posts inaccurate things like this. A bullish reversal is looking good. The answer is no, it doesn't, okay? Because unless you are a trader and you understand what this picture says, you are basically doing a giant disservice to people learning technical analysis. This does not imply that a descending triangle breaks to the upside at all. A descending triangle breaks to the downside, okay? So for those that don't understand how to read this picture, I have to spell it out. What it means is that if the triangle does not break to its statistically accurate direction, it has to first break out above the last point of the triangle that rejected it. Then your buy point, your buy the pullback off the new swing high, if it pulls back and rebounds off the prior swing high. So this is the buying point, and you can't even assume this is going to reverse the price. So you almost have to wait till around this area here in order to actually buy the breakout. And that is the difference between these things. I don't know, I wish I could like get rid of this nonsense, right? Like I almost want to block people so that this garbage and the incorrect interpretation of this garbage is not on my Twitter feed for people. So this is where you buy it, not here. Not here, because here you can still readjust the triangle. You buy it here where it says buy the pullback, okay? Then you set your stop loss at the bottom of the triangle, and then your target becomes off the pullback, the fat part of the triangle. Like the target itself is telling you, you do not buy until after it pulls back. So if we go to the picture and we try and interpret what that says, here's what that says. To me, the last touch of the triangle is this blue line, which I was using for my stop loss. Let me toss you guys a bone. Let's assume I lower it. Let's assume we make it this as the touch of the triangle, which it's not. What that picture says is, your price has to break out above the triangle and set a new high. Actually, I should make it blue. Like that, and or purple. Let's make it purple. I want to pick a color that's not on the chart. Okay, then you need a pullback back to the area of the last high. Then, and only then, if it bounces off of this area a little bit, actually, I'll make this purple as well. Even a little bit, just give you something positive. Then and only then do you admit that this triangle broke out, and then you buy to the upside. That should probably be an arrow. Then you buy to the upside. You know, and then your target becomes this, whatever that is, 600 or 5200, right? So then you take this. I'm going to delete all this, by the way, so enjoy it while it's on the chart. Then you take this guy, you stick it here, you flip it around, you put it here, and that becomes your target off of that blue line for 50%, or, you know, and this is where it gets tricky, right? So it's either a 50% upswing of 52%, or the $6,600, right? Whatever you want. Like, you want to be optimistic, go with that one. I would go with the more pessimistic target and then raise it to the more optimistic target if the situation calls for it, right? That is how you trade the breakout of a triangle in the opposite direction. And that's exactly what that picture says. Well, like it, and if that happens, great. I will be a bull, but I will not be a bull until here. Now, this is the most optimistic case. This is the most, and you're not going to catch the bottom. You're going to get in a little bit late. You're going to get in around here, and that's your target, right? That is your most optimistic target. The normal target would be halfway to that zone with a 50% rise, right? Now, the other scenario is this may not even work. It could work. I mean, I can maybe fudge this a little bit to kind of get this a little closer. You know, I can maybe do that. Like I can maybe squeeze this in. Like, I'm trying to give you the bullish case, right? Like, I still can't get this high to hit that top of the triangle, but it's close enough. It's close enough, okay? The other option is by raising this line to here. You will now need these to be substantially higher, like that. This would need to go from there to here. That means this arrow gets moved up. This little piece gets moved up like that. And then you go bullish off of that, okay? Either way, and now this becomes, you know, this goes here or something, you know, but you get the point. The point is that if it's a breakout out of the triangle, above the triangle, your buy point is not until after it pulls back to the prior swing high, okay? That is how, that is the analysis of a descending triangle breaking against the 70% statistical probability that the drop would be to the downside, because the trade you make to the downside, you don't have to wait for anything. The moment it starts trading below the thick red line, you're in the short trade. This is why I am in the short trade. I jumped the gun a little bit, anticipating that the bottom side will break down over here a few weeks ago, and I will just wait. And if it gets back to this line, I will double down on the triangle breakdown, okay? I understand that statistically speaking, this bullish scenario has a better chance of happening the closer we get to the tip of the triangle, but it's still not above 50%. The breakdown is still the higher probability outcome. I will put a note on this before someone takes a screenshot and says tone is bullish. I will make a note. And say 30% chance of upward breakout. Oh, shit. That's not the one I wanted. I didn't want a shallot. I wanted this one. And we can make it green, you know? Oh, wait, that's the text. Text can be black. We can make it green if it makes you guys happy. 30% chance of bullish breakout. And then I can say I'm making this purple. And now we can add another one here. Well, and this can be green. Whoa. If bullish break, buy the dip. Okay, there. That's the dip that you buy. Now I can make this, and that's the target. I'll even leave the bullish target for you. I can make this a little smaller if you guys are happy, you know. I'll make it smaller. You can buy earlier, you know, and that becomes the target. And this goes right to there. There. That is what you would do if you have a 30% chance of a breakout. I don't like this. There. Okay. And now we can take a red arrow and do this. All right, let's be reasonable. Let's only go to 5,000. I'll make this arrow thicker. And then we can take another note. Put it here. Make it red. No, let's make it deep red. 70% chance of breakdown. Done. Okay. That is what you're looking at. Put that right there. All right. And let's see how this develops. I should probably start this. Yeah, there it is. Okay. Done. There. Take your screenshots. And that is what I am looking at. Okay. Should probably see what the troll box has to say. Probably shouldn't see what the troll box has to say. I haven't been looking at the live chat, guys, at all. Now, it can also stay flat for the next 9 months. But saying that it's going to stay flat for the next 9 months is hard to predict. And why do I make videos, right? If I'm gonna call Bitcoin to do nothing for the next 6 months, I might as well just do it on Twitter. Bitcoin is gonna do nothing for the next 6 months. Like, what's the point of making videos, right? So you can't say that, Tone, you've been bearish the whole time, but we've been neutral, so you've been wrong. Okay, fine. Like then why do you watch? Then don't watch. It's that simple. But this is what I'm looking at right now. And put this here, lower. Okay, well, actually, hold on. Should probably move this out of the way. It's not going to break out this week, obviously. So it has to be, you know, later on. There. Okay, that's it. Enough of the daily chart. Sorry, enough of the weekly chart. Let's move on. The daily chart. I want to point something out that's kind of interesting. Okay, so on a daily chart, Notice this purple channel as we continue to be inside this purple channel. Now, notice something here. Notice how these red arrows as to where I expect the price to go. These red arrows, you know, the price isn't going towards those red arrows, right? And people continue to say, oh, you are so wrong, you are so wrong. The price isn't going down to your red arrows, even though it did go down to these red arrows here and here and here and here, and almost got to this line here. We got to it later on. And I continue to be more bearish than the price is. I don't know how long you guys have been watching me, but in the 2016 and 17 bull market, look at these green arrows, this one, and this one, and this one. And eventually this one I got right. So look how wrong I've been, being more bullish than almost anybody else throughout all of 2016. Look at how wrong and how ridiculous this blue arrow was. Okay, sure, I gave it two possibilities. I gave it a deeper pullback at the time before the descending triangle before the ascending triangle fully formed. I thought we can have one more buy the dip situation, and then, but look at this other orange arrow. I got this totally wrong, and I got this totally wrong, and I got this totally wrong, and I got this grossly wrong, and I got this one grossly wrong. But look where all of these arrows are. All of these arrows are pointing to the upside while everyone is panicking over China and the government and the halving and the seg with 2x and the ETF and people rage quitting and Bitcoin being big blocks. I was the biggest bull. I was bull to the point of laughter. People were saying that Bitcoin is not going to go up that high. And then look what happened. And over here, I started to get cautious. And now my current bear position is no different than my bull position was in 2016 and 2017. The charts were telling me to ignore the nonsense of everyone being scared and stay bullish. While today, the charts are telling me to ignore the nonsense of everyone being bullish and stay bearish. It's just technical analysis. That's what it does. It's not always going to be right, but it has been for me in the 4 years I've been doing Bitcoin TA. Okay, so there you go. These arrows are no more wrong than these green arrows were back in the day. And I have not changed these arrows since the day I drew them. You can go back to my Cointelegraph articles or my videos from back then. Go find the videos from 2016. I'm sure they're there. Go find tweets from 2016. I'm sure they're there somewhere. Articles, they're all around somewhere. I was writing for, I think I was writing for Brave New Coin then, after Cointelegraph, on the World Crypto Network. I don't know. I don't have time to look for them. So the daily chart, let's zoom in. And if enough time goes by, I'm going to draw another red arrow if we stay in this zone. So I understand this is Bitfinex, but Bitfinex is finally getting into line with Bitstamp. So they're about to be at the same price. This is where I put my short in. Probably jumped the gun. I saw this big red 1 candle. I anticipated the red 2 to go below the red 1. I anticipated this candle to be like this candle, only in the opposite direction. Tether imploded. Mentally, it didn't actually implode. Tether is back to where it was at this time. The price is still a little bit higher. Let's see what happens with that. There was a 9 to the downside. We had a 1 to 4 candle correction to the upside that fits the criteria. And now we're going back down. And I'm waiting for my red 1 price flip. And then I'm going to wait for my red 2 to go below the red 1. So probably sometime later this week, we might have it. But right now, this is totally neutral. I'm leaning bearish, but not by much. And the daily chart has not been very useful. I've said this many, many times. The 12-hour chart, I presented a bullish case. I expected this count of the sequential system to get me to a 9 and then reverse and go lower. Clearly, that did not happen. There was more weakness in Bitcoin than that. And we had a big red 1 candle. We had a red 2 go below the red 1. And now we're on the red 3. So technically speaking, the sequential system on the 12-hour chart gave you a short trade as of $6,342 on the chart of Bitfinex. Obviously, I can remove these arrows because they are no longer relevant. So what I am looking for at this point is once we get back to this line, I expect us to accelerate to this blue line. This blue line has been, actually, I'm not sure why it's there. It should be like here. This blue line is very critical support. It is also right next to the setup trend line. And if we break that area, I anticipate an acceleration to the downside. These arrows are randomly drawn in time for time purposes. Now, what would your stop loss be? My stop losses are usually blue. So let's make this purple. And now we can add a blue line. On this particular trade, your stop loss would be in the vicinity of the prior swing high. So that is either here, if you want to be, a little more conservative with your stop loss, or here, if you want to be a little more generous with your stop loss. Now you can say that is a ridiculously high stop loss. It's only a ridiculously stop loss if you are 20x leveraged or 50x leveraged or 100x leveraged. If you are 2 to 5x leveraged, that is a very reasonable stop loss. My stop loss is even higher, right? If you are, even if you're probably 10x leveraged, that's probably a reasonable stop loss. Maybe not 10, but certainly 5. So you got to get your position size and leverage in check because my position size and my leverage allow, well, this is Bitfinex, right? Other exchanges didn't go like that. My position size and leverage allowed me not to panic when the price jumped to 7,000 from 6,200. Okay, so you got to adjust your position size and you got to adjust your leverage to be in line with the trade itself. Okay, so that is what we're looking at on a 12-hour chart. Again, Bitcoin was weaker than even I potentially would have given it credit for. We did not make it to the other moving average. We got rejected by the current moving average. So I can once again delete this arrow. This arrow played out fairly well, but from a lower point. We can move this arrow down, and I'll make this full screen. This is that line. I'm going to... I don't want to make it red because red is usually what I use for entries. Now notice that the 4-hour chart topped on a beautiful 9. It wasn't a perfect 9 because it converted to a 1 before the candle ended, but it's still a 9 nonetheless. And there was a red 2 going below a red 1 somewhere. You had a reversal candle. I'm going to adjust. I'm going to make this line purple. Whoa, that's not exactly purple, is it? I don't know where best to adjust it. I'll probably adjust it to here, and then I'll scroll back. Yeah, it's not the best, but it's good enough. And once we can get below this line, I anticipate an acceleration down. Now, you can say, hey, Tone, you went past this line here. Well, the line didn't really exist there. Actually, no, it probably did. Yeah, you went past it, and then it head faked. And then you went past it again, and then it head faked. And then you almost went past it again. Well, yeah, shit happens. Trading is not easy. Trading is hard. And if you've done it, you know it's hard. So yeah, one of these days, it's going to drop, and you're going to think it's going to be another head fake, but it's not. And it's going to close down here somewhere. Okay, so I will remain. And it's a 4-hour chart, so it's probably not going to happen for a few days. So we can simply extend the line. There. Next, hourly chart. Well, I should send out another tweet, shouldn't I, right? Because the hourly chart continues to be a textbook version of the sequential system. You have a 9 at the high. You have a 9 at the low. Now, I will admit, this is not the easiest candle to trade. It's not. And it's not the easiest candle to trade. Yeah. I mean, if you bought up here, you might have gotten wrecked. If you bought down here, you got very, very lucky, right? Now, that wasn't even the low. The low showed up here. We broke the setup trend. When that happens, this should have kept going down, but then it rebounded. Again, trading is not easy. It rebounded. Your stop loss would have gotten hit. If you do trade the sequential system, how would you have traded it on this particular chart? Well, in the current environment. Well, in the current environment, you could have gone long on a 3 breaking above the 2. That took place at what, when, and at what price for the audio podcast? That took place at 1700 UTC, no, 1700 New York time, I think. I don't even know, because right now we're at, oh no, UTC time, yeah. 1700 UTC time on the 3rd of November, you go long. When do you take your profit? You take a profit on the 9. When do you short? Well, if you're cavalier, you short at weakness off the 9, but not convincingly. Like somewhere in this vicinity, you can take you can dip a toe into a short trade. Okay, but your real short trade is here, right now. Well, last hour. The moment this 4 went below that 3, that is your short trade. Where's your stop loss? You have 2 options. Either the swing high or the larger swing high or the larger close of the swing high. 3 options. You have 3 options. This one. So you're short for the audio podcast, guys. Your short on the hourly chart is of 63.72 on Bitfinex prices. Your conservative stop loss is 63, let's say 80. Your second leaniest stop loss is 63.90. And your ultimate stop loss is 63.92. Okay, these are hourly candles. Adjust your risk and position size accordingly. Maybe I'll do a workshop one day on position sizes and stuff like that. What is this? This is GBTC. Now this is interesting. I recently looked at GBTC. And this is GBTC daily. And I may change it to a weekly to be just so that it's cleaner. Debatable if that's even cleaner. Shit. And I need to make the chart itself cleaner. So we need to go to background, drop the lines, and drop the lines. Okay. So as you can see, GBTC, I believe, has broken down from its triangle. Now, you can keep, and this is also why I hate wedges. Like, people are going to draw like this wedge, right? Hey, it's a wedge. You have this, or however they draw it, you have this, and you have this. And it's supposed to break out of the wedge. Well, maybe, because if the next candle is a big downward candle, you're going to say, wow, now the wedge looks like this. Okay? And that's why I don't like wedges. I hate them. I never, ever use them. I like my triangles. I'll draw my triangle. There's my triangle. What is my triangle telling me? My triangle is telling me that we have broken down. It's not a great triangle because I can't get 3 points to touch. This is the best I can do with the triangle. Okay? It's the best I can do here. Well, maybe I can raise it and shorten it. There. Okay? So we broke down from the triangle. We went into the triangle. We broke down from the triangle again, and now we're going down. Okay? This is the August $5,000 top, if my memory serves me correctly. Let's see. The $5,000 top took place at the end of August. My target for Bitcoin is the first target is the $5,000 top. If you look at GBTC, this is the $5,000 top on GBTC. Let's give it the benefit of the doubt and remove irrational exuberance and say that the candles close at the end of the week after the premium got out of hand is the true $5,000 top. You can see that GBTC has already went below that point. So what's the next point? That is this point. That's May 22nd. Where was the price of Bitcoin on May 22nd? That is this. Well, no, sorry, that's May 22nd. That's the irrational exuberance. The $3,000 top, called perfectly by sequential, by the way, was the first week of June. So again, let's go to GBTC and find the first week of June. That is right here. Okay. So again, either we are at the high of that week or at the, well, I guess candle closes down there, so we can't use candle close. So let's just use the high. That's a reasonable high. No FOMO there. So we have almost touched. We have almost pulled back beautifully on GBTC. We missed it by literally a hair on GBTC of the back test of the June $3,000 top. So we've broken down from the triangle. We back tested the June high. We back tested the August high. We almost back tested the May high. So I don't understand why it's unreasonable for Bitcoin to also break down from its descending triangle and for Bitcoin to also back test the August high and for Bitcoin to also backtest the June high. I'm not saying it is certainly going to happen. I'm just saying it is not unreasonable to consider the fact that it could. Okay, now, one of the reasons why the GBTC stupid premium is going down is because people are once again overexcited about the SEC making yet another announcement of like a dozen ETFs that they are, that I have an 80% confidence this time they are going to reject all of them. I don't expect a Bitcoin ETF this year. I didn't expect it last year. We've gone through this time and time again. In fact, I would consider buying GBTC at this current premium. I probably shouldn't have said that. I should have just went and bought the damn GBTC, because when the ETFs get rejected, the premium on GBTC is once again go through the roof. So I probably should log into my retirement account right now and put in a bunch of limit orders on GBTC. I probably should have done it before the pop the other day. If I had to guess what caused this pop right here, if I had to guess this silly pop, the way this silly pop and that silly pop, it's probably because people get this thing. It's like, hey, maybe the ETF's gonna get rejected. So maybe I'll wait for the hype of the ETF. Oh, you know what? I should put in my moving averages here. I should also probably put in my sequential. Triple moving average. And, oh, what do I put on this? This is the daily, right? So I don't know. I don't want the 100. So maybe the 128. And the 200, I guess. I don't know. Oh, wait, I'm putting in triple moving average. I meant to put in the triple moving average forecast. That one is 730 and 50. That's fine. I'll just leave those for now. And then the TI. Okay, so maybe I'll wait. No, it's too, okay, so I also have to go here. I have to go to background. I have to drop indicator values. And I don't need to see all of that on a TI. So I'm going to drop that and I'm going to drop that. Okay, here we go. This is the daily one. So maybe I'll wait. Maybe I'll wait for this line. Maybe I'll put a bunch of limit orders around $6 and buy BTC at $6, right? But remember, if the price of Bitcoin drops out of its triangle, then GBTC can drop to $5 or $4 or $3, right? So, and look at the volume. Look how pitiful the volume is on GBTC. Anyway, that's what you get. Here is the, I probably have to adjust this factor. I always have a problem with this coefficient. But this is the price of Bitcoin divided by the coefficient on the backdrop of the GBTC chart, or the other way around, with GBTC chart as the backdrop. So red is the GBTC, and blue is the price of Bitcoin, but the coefficient needs to be adjusted. Another way to look at it is this. This is the liquidity premium, or the illiquidity premium. And as you can see, we hit the oversold RSI condition on the premium. It does get volatile at times. This is a daily version. I can try the weekly version. Maybe it looks cleaner. No, the daily version's better. The line should probably be thicker. Looks better. And volume is atrocious. And you are near the lows here, right? So let's grab a purple line. Whoa. Whoa. That's nice. That is nice. That is nice. So we are literally at the lows of the GBTC premium. Now, again, this is what's frustrating to me. The coefficient, because GBTC has a 2% yearly maintenance fee. That means that GBTC has now been around for, it started in June, right? So so we'll use July, right? So 1 year, 2 years, 3 years. Wait, something's wrong. GBTC has been around longer than that. It hasn't been traded here, right? So GBTC has been around, I believe, for about 4 or 5 years. So 10% of the value of the Bitcoin in GBTC went into Barry Silbert's pocket for managing the trust. And therefore, I'm always struggling with the coefficient. But in any case, this is what we have. And because the coefficient has to be adjusted every year based on the data of that year, it's shitty math that I have no time to write a script for. But it is a little over. It's probably a good buy point. I'm gonna see if I can log into my broker after this. All right, that's it. Ethereum is still a basket case with its triangles. Spoke about it at length last time. Please go see it. B-Trash. I just opened it up yesterday because someone pointed out that B-Trash was on a 9 buy, and I hate my indicator sometimes. Well, it's not actually my indicator, but this indicator does do well on pure and utter nonsense, and there it is. Again, of course, hindsight is 2020 because I didn't know there was a 9 on this garbage because I don't look at this garbage. And there it is. There's the 9 4 days ago, and now it's going up, and for whatever God knows reason, it doesn't matter. It's irrelevant. The premium of Bitfinex price of Bitcoin and Bitstamp price of Bitcoin is almost back to parity. So let's give it a few more days, and it probably will be. The S&P 500 daily futures S&P 500 was looking great, but it was a Friday. People probably did not want to risk the election on Tuesday, and they took their money at the end of the day. That's my only explanation. Here's the weekly candle. The weekly candle is still in a bearish posture, but if we can break back above this purple line, I believe that's the top of the channel, we could be okay here. So I'm not going to say anything about the stock market right now. I'm actually going to delete that line because it's in the way. And let's wait and see how the market opens. I believe it's 12:30 a.m. on Saturday in New York. I think so. So we have a whole other day to go. Here's the daily S&P. I'm going to cut this video in 5 minutes, guys. I actually do want to either do work or enjoy my last day in Perth because I'm leaving tonight. The daily chart, the day started very strong, ended very weak, but not as weak as it could have ended. I'm going to reserve all reservations right now. The daily chart is bullish. The weekly chart is bearish. Something is going to have to give here. I do expect us to hit a moving average, maybe both of them. That's it. I actually don't feel like going through equities, through individual stocks today, mostly because this already took too long. And but I will go back to shilling the affiliate codes. Please support. If you like my work, I have 1,300 viewers right now, which is amazing. And please check out the Unconfiscatable conference in Las Vegas, 24th to 26th. I am working on better, well, maybe not better. I am working on speakers that are just as good as my current speakers. I'm trying to make this the best Bitcoin conference annually in the world. And for some fun, we are going to have a professionally organized pro-am style poker tournament with as many crypto celebrities as I can convince to pay 0.1 Bitcoin for Doug Polk to potentially win. expenses will be taken out and a little piece will go towards Bitcoin development. But other than that, we will redistribute the rest of the prize money denominated in Bitcoin. Everything here is denominated in Bitcoin. I need to hedge my currency risks, but everything is denominated in Bitcoin. The entry fee to the tournament, the entry fee to the conference itself, which are separate, the entry to the carnivory dinner, which eventually will be posted, and my workshop has always been denominated in Bitcoin. Perth should go away by tomorrow, based on time zones, and because the Perth one is already ended, and mine has always been denominated in Bitcoin at 0.1 Bitcoin to attend. I don't know about others. I believe others are denominating in fiat and accepting Bitcoin. So for example, Jimmy Song, head on over to his website and you can sign up for his workshop. This is all completely separate. That's about it. That's it, guys. I don't think I'm gonna do any Q&A. Yeah, I'm not gonna look at any traditional stock, guys, sorry. But yeah, you see the speakers and I'm trying to get you more. I just don't want to tell you who I'm reaching out to because it's not fair to them. And 6 tickets left at this price, by the way. Maybe a little more tickets at this price, but the next tier of prices is double this. Prices will double once 50 tickets are paid for. That's the early bird special. There's only 300 tickets available for sale. This is not consensus. There will not be 10,000 people at this event. The venue is modest in size, and only 300 tickets are being sold in total. And price goes up every 50 tickets. Okay. All right, guys. On this note, I'm going to call it a day. I'm going to end screen share. Sorry I couldn't get to your questions, but I didn't really have Corey on with me today to compile those questions. I don't know if Sasha was compiling those questions for me. I can check Telegram to see if anyone sent me questions, and I don't see any. So therefore, I am going to call it a day. Sasha, thank you for hanging out. If you are in Florida at the moment, it's 12:30 in the morning. Hope to see you in Vegas, and we will do another Bitcoin law review next week. I am in Melbourne as of tomorrow, and I will try to bring you regular podcasts once again from Melbourne, and hopefully I'll get time to hit the beach. All right, guys, on this note, I will call it a day, and we will talk to you all on the next one.